In the world where creativity meets the technology, the name only stands out in forefront is Adobe. And that's what we're going to discuss in detail. It has redefined our digital experience. Whenever we are talking about to edit our photographs, make it beautiful or change the background or change something else, and the first software come in the mind is Adobe. It has been silent force behind countless innovation. It is founded in 1982, known as a software solution provider. I know you have heard about the name called Acrobat, Illustrator, Photoshop. These were the softwares which Adobe used to provide. When the license is sold, people used to install in multiple computers and they were able to use it. So that revenue was not able to be visible in the earnings. But in Creative Cloud, which was launched in 2013, all these softwares was changed as a software as a service. So whenever it is being used in a new system or when the new logins, there was a new charge or new recurring revenue coming in the Adobe's cash flows. So the revenue goes up. And that's what we're going to dig in today. And we're going to dig in what's happening in its latest earning call and why the share has gone down so much and what is the reason behind it. So let's dig it up. Now let's talk about the technical analysis. This is also important. I have put four moving averages: 50, 200, 300, 400 moving average. And this is just an indication for me whether the stock is worth looking into. Can I look into this investment or not as my next opportunity or not? If you see here in the chart, at a time whenever it touched 400-day moving average, it has touched in 2022 around September 3rd. It has touched twice. There was increase in the volume. So people has given interest when it has touched moving average, and it has actually respected that moving average whenever it has touched. It has never gone down below it. The same thing is happening now. It has touched its 400-day moving average. Now, if I see the volume has increased. But does it mean that I should invest in the company? The answer is no. Should I look into it? The answer is yes, yes, because the company is trading at a price where it is a good time to enter. And when we enter, there is a chances of high probability that I will reach the highs or existing highs and make profit out of it. Even after looking at the technical analysis, if I check the fundamental part of it and see its revenue part, in the revenue here, if I see here from 2023 to 2025, the revenue appears to be growing. Yes, it has grown. Even growing revenue, and let's check the EPS, earnings per share. That means the amount of money the company bring in for one share that it earns. $4.13 is the money that earned by a share price at 399. So that's much you're paying 399 bucks, and in return, the company is getting around $4.13 in buck. So that's the earnings per share. If I see it has been increasing 3 to 4, and it has been increasing in a linear manner, yes, but it was down in 2024 of March, but it could be because of small or they put up money in large investments or AI chips or something like that. But the question comes here is that even if their EPS is going high, even if their revenue is going high, what is the reason the stock has fallen down? That means I need to understand the call's transcript. And that's what I did here. I used AI tools to give me some of the key parts, what is happening with the earnings and why the stock has fallen down. So I used Grok for that. And here it is. I gave the transcript and I asked for what was concerning in the transcript. So here it is. The first thing is, oh, it's about monetization. So that's what the first thing they're concerned about. That means they have invested a lot of money in AI, but they're not able to get that money out in the return of investment as a recursive manner or as an offering. But the question comes is why? Oh, they're talking about tools called Firefly. Okay, this is very important because Firefly is this software which you can see here actually generates videos or images or short clips. And you know that there are many competitors for this. Many. ChatGPT, Gemini, you talk about Grok, and these are big companies. They are whales, and Adobe in front of them is not whale. It's a small fish as compared to the market cap. So even in investment in this business, it would be really, really very hard to monetize this piece because the amount of money Adobe will spend on this and the amount of money Google or ChatGPT will spend on it the difference would be high. And that's what the backbone of these generations, because GPUs are the one which generates this whole animation dynamically by just writing a small prompt. So that appears to me the bone of contention, and it appears to me that it would be really hard to monetize this part. Let me understand what the exact words the company has said on this. So if I go down here and ask what was the exact words the company has used, so here it is. We are still in the early stages of figuring out how to fully monetize our AI offerings. If you hear these is words from management, you can understand that there is uncertainty in the management words, that they are not even sure that how they're going to monetize this. So this statement actually suggests that Adobe is struggling to generate consistent revenue from its AI technologies. Okay, let's go down and understand more. Oh, there was a competitive pressure. So we are seeing increased competition for newer AI powered tools that are challenging our market share, particularly in image and video editing. Oh, this is going to be pain in the butt, because image and video editing was the bread and butter for Adobe. And the increased competition because of AI powered tools has challenged its market share. It's like you are hitting the company's backbone. So this admission and this earnings is a real threat. That means their existing cash flow or their existing EPS can have an impact. So that means it's also showing that the dominance of Adobe is in doubt, in my view. And if I talk about another part is about vague responses to analyst questions. So what was the vague responses? Our strategy for addressing these competitive threats is still evolving. I mean, in my view, it is still evolving because AI itself is running at a very fast pace. But yes, this statement shows a complete uncertainty that what is the management next step for its own competition that is right in front of their doorsteps. And it brings a competition. Okay. But on the contrary, you have to also understand that AI is evolving very fast. Whoever pays more money for the chips run uses more chips with high amount of data is actually front running. It's like the chips are actually your engine. So engine horsepower, the higher the horsepower, the more energy or the faster you can go forward with it. So that's what the game is. uh, they are uncertain about AI investment payoff. While we are investing heavily in AI, paths to profitability for these initiatives remain unclear. This highlights that the financial risk for AI is going to be there, and they're going to be heavy spending because there is no clear route for profitability, and it could strain the resources. And since the competitors are actually hitting their backbone, this is going to be very painful time in my view. Let's do another thing. Okay, this is what they have shown it, but I have done another thing which will show the future part of it. And I've done a Google trend here. Okay, I've done a trend of Adobe's competitors, Canva, CapCut. They are some of the softwares which are used in video edit and image editing. If I Canva is in blue color, Adobe in red, and CapCut in yellow. CapCut is a very small company. It's not even a public listed company. Even Canva is not, but still, if you see worldwide past 12 months, there is a lot of public interest in Canva than Adobe. And that's concerning to me because this shows people mindset. It doesn't show the revenue or cash flows, but it shows people are more interested to learn Canva than Adobe. You can understand once you learn those softwares, those applications, you could stick to it. And that's where the revenue keeps on generating. And if I see out loud here, Canva appears to be the big winner here. And it's winning by the leap. And every moment the search has been increasing compared to Adobe. And if I take out the CapCut out, because CapCut is a very small company, and if I remove this one and just do a comparison between these two, yes, Adobe has been consistent. It hasn't reduced its curiosity or search, but it hasn't even increased it. Whereas Canva, it appears to be it has increased it. The younger generation, I've seen people using more Canva or talking about Canva rather than Adobe. And that appears to be concern to me in comparison to the competition. So it appears to me that the competition is real. There could be dent into a company's backbone, Photoshop and other Premiere Pro softwares, because other AI tools like Canva or other companies are actually taking the market share. And I can see this here in the picture here quite clearly. So now let's talk about another fundamental piece over here. And I'm going to go here about to check its EPS. And when I check its EPS for past 10 years, this looks very good. That means the earnings per share has kept on increasing steadily. Company has been in good shape from the EPS point of view. Well, now let's talk about whether the company is cheaper or not. Okay, let's check about their PE. So if I check their PE chart for past 5 years, and this looks beautiful. The reason is that in September, when this 400-day moving touched, the P was 27 times. And now, when it is touching here, it is touching around 30. So it's very close to its lows. So that means if the company gets a little boost, so there are basically two engines you can understand. One is your earnings per share, and another is your price to earning. Price to earning is more like people's mentality or a perception. And if perception of people is down, that means the stock price has come down. But if the earnings per share has kept on increasing, the PE, even if the number stays the same, the share price will go higher. And when the perception of people changes, that means people started giving more interest to the share. That time, the second engine will run and make this train go faster. So currently, the P is low. That means it's the time when it's at it's the beer pace. And if I see here, the bull case is that the PE ratio of 32 point is better than the industry average of 50, 55. I'm not sure what industry median he has been using it, but it appears to be that that average is higher. And if I see from the chart itself, it is reaching to its lows where it needs to be. And that's whenever there's a high risk of uncertainty and you still believe in the company, that is the best time to pounce into that company. It doesn't mean this is the time for this company right now, but this is what I'm looking into this company, that whether this is the right moment or not. Nothing here I say would be a financial advice, but this is how I'm trying to understand the companies. So with that said, in my mind, in my view, this company appears to be in a territory where it's very highly uncertain, and there is a lot of competition. If I see the Canva results, it's a comparison of trends. People are more interested towards Canva than Adobe. It's a concern for me. If I talk about Adobe Firefly, which was one of the key topics being discussed in the transcripts, I see there's a lot of competition in this business too. And with these factors, I know that if you are in competition, that means the EPS, the earnings per share, will go down because finally you have to give benefit to consumers because there are bigger whales who are solving the same problem. With that context in my mind, in my view, if I just check the company's PE, it doesn't mean it has touched the low, but doesn't mean that it will always stay low. The time will tell and the competition will tell that the uncertainty has changed or not. With that point, I will end this video. In my view, this is stock is worth looking and it needs further analysis. And based upon that, you can take a call on it. Thank you.